Hey guys, welcome back to another episode. Today we're going to be talking about ETFs. What are ETFs, right? Things to consider before investing in ETFs, ETFs versus mutual funds, some differences and stuff like that. So let's start off with what is an ETF, right? ETFs are a type of exchange traded investment product, and that must register under or with the SEC, right? And it's got to be as either an open-ended investing company, generally known as funds, or a unit investment trust, right? So, like mutual funds, ETFs offer investors a way to pool their money into a fund that makes investments in stocks, bonds, other assets, and in return to receive an interest in that investment pool, right? So it's, a bunch of people investing in the same thing, right? But unlike mutual funds, right? ETF shares are traded on a national stock exchange and at a market price that may or may not be the same as the net asset value, right? The NAV, which we've talked about in a previous episode. So they may or may not be trading, or it may not be the same as the NAV of the shares, right? But that's the value of the ETF's assets minus its liabilities divided by the number of shares outstanding, right? So let's talk about some stuff to consider before you think about investing in an ETF, right? So ETFs are not mutual funds, right? These are two different things, right? So generally, ETFs combine features of a mutual fund, which can be purchased or redeemed at the end of each trading day at its NAV per share, with the intra trading feature of a closed end fund whose shares trade throughout the trading day at market prices. Okay, so unlike with mutual fund shares, investors can only purchase and sell ETF shares in market transactions. That's like, unlike mutual funds, ETFs do not sell individual shares directly to or redeem their individual shares directly from retail investors. But instead, ETF sponsors enter into contractual relationships with one or more financial institutions known as authorized participants. And these authorized participants typically are large broker dealers, right? And only authorized participants are permitted to purchase and redeem shares directly from the ETF, and they can do so only in large aggregations or blocks, right? Think like 50,000 shares, 100,000 shares, really big blocks, right? Commonly called creation units. Okay. Other investors purchase and sell ETF shares in market transactions at market prices. An ETF's market price typically will be more or less than the fund's NAV per share. This is because the ETF's market price fluctuates during the trading day as a result of a variety of factors, including the underlying prices of the ETF's assets and the demand for that ETF, while the ETF's NAV is the value of the ETF's assets minus its liabilities, right? And it's calculated by the ETF at the end of each business day, right? So, what are some different types of ETFs, right? So, we're going to talk about two different types, right? The first one, we're going to talk about index based ETF, right? Which is the more popular one that's really kind of, the past couple of years, this one's really kind of blown up, right? Most ETFs trading are index based ETFs, right? These ETFs, they seek to track a securities index like the S&P 500, and generally invest primarily in the component securities of the index. So let's take an example, right? SPDR, right? Sometimes referred to as the Spider ETF. It seeks to track the S&P 500 index, right? It invests in most or all of the equity securities contained in the S&P 500 index. Some, but not all of them, right? ETFs may post their holdings on their website on a daily basis. That way, if you're thinking about investing in one or you're currently investing in one, you can see, what their holdings are at the end of each day, right? So the next one we're talking about, the next type of ETF, it's going to be an actively managed ETF, right? So the actively managed ETFs are not based on an index. Instead, they seek to achieve a stated investment objective by investing in a portfolio of stocks, bonds, and other assets. So, unlike with an index based ETF, an advisor of an actively managed ETF may actively buy or sell components in the portfolio on a daily basis without regard to conformity with an index, right? So, it's not going to be like the previous example we used was an index based ETF, right? It tracked the S&P 500 index. So with an actively managed ETF, it might buy something that is in fact not in the S&P 500, right? So that would be like the main difference, okay? And I'm sure most actively managed ETFs are going to have a higher I don't not commission, but like you're gonna have to pay for them to manage it, right? That managing fee for that ETF, it's gonna cost you more, right? So let's talk about you know, some of the other things, right? Like there's not just index ETFs, right? There's commodity ETFs, right? They're designed to track the price of like a certain commodity, right? One of the two bigger ones are gold and oil, right? But you can also have, silver, coin, like whatever it is, right? There's in ETFs that are designed to profit from a decline in a certain market or index, right? Then there's industry ETFs. They're designed to provide exposure to a particular industry, right? Pharmaceuticals, tech, any biotech, like combining the two, or maybe the EV space, automotive space, like anything, right? And then there's foreign market ETFs, right? Tracking the non-U.S. markets, Hong Kong, Japan, all that stuff. So it really just comes down to which one, are you going to go with? And I mean, you know, personally, I would say try your best to stay away from actively managed ETFs and probably go with either industry or commodity or index, right? Those would be the three. Foreign market ETFs, I'm not a big fan of. Inverse ETFs, I'm not a big fan of. But index ETFs are probably one of the bigger ones, and then commodity and industry ETFs probably follow closely behind, right? But before you invest in an ETF, right, you should read both its summary prospectus and its full prospectus, right? So that's going to provide detailed information on the ETF's investment objective, principal investing strategies, risks, cost, historical performance if it's been up for a while, right? The SEC's Edgar system, as well as just Google, right? Just use Google. It can help you locate specific ETF prospectus. You can also find those on websites of the financial firms that sponsor a particular ETF, right? Or like if you're using a broker, you can go through a broker, right? So, don't invest in something that you don't understand, right? If you can't explain the investment opportunity in a few words in an understandable way, you might want to either go try to look into what it is, or maybe reconsider that particular investment and look into something else, right? And the last thing I'll leave you with is, you might want to consider seeking the advice of an investment professional, right? If you do, be sure to work with someone who understands your objectives and tolerance for risk, right? Because your investment professional should understand complex products and be able to explain to your satisfaction whether or how they fit with your objectives, right? Because it's your money and you need it working for you in the way that you want to get to the goals that you have set for yourself or that you're trying to achieve, right? So hopefully, this kind of broke down ETFs as basically as I can put them down for you. If you have any questions, go ahead and ask me down below. Go ahead and like this video, share if subscribe if you're not subscribed. And until I'll see y'all in the next video, y'all be safe.